All right, welcome back to Yunnan Yield. Hope you're doing great, guys. Glad to have you in another one.
Another one.
So we have a little bit of change of location right here.
Not bad, not bad.
Definitely like it. Unfortunately, still have some problems with the GoPro. This is still on the webcam mode.
It is what it is.
Anyway, guys, the other thing, as you can see, guys, I have been representing Germany right here. So representing them right now, I should rather say. And yeah, basically our team is trash. Should I say, unfortunately our defense just sucks. Yeah, I hope it's gonna get better until the Euro Cup, otherwise we will have another scandal on the hands. But let's see what Nagelsmann can do. Very curious about it because there's a lot of potential in the team. It's just that the defense, I think, is not really good, and also I don't know about our attack. We will see. Anyway, guys, now we want to talk about trading, of course. And this video will be about private trading versus prop trading.
No way.
We want to explore both routes, right? We want to see also in the private trading, there you can flip accounts, how you do that.
Nothing to see here. Please disperse. Nothing to see here.
We want to explore that as well. So flipping accounts will be a big topic here in the video. However, we want to explore also a little bit the prop trading side. And then we want to kind of compare each of them because I have been doing both. You know, I have been doing private trading and I have been doing prop trading for many years.
Nice.
I started, of course, with the private, but then switched into prop trading once it became available with the modern prop trading, when FTMO started it basically. And so I know how to play both sides, and that's why I know where the disadvantages and advantages are. And also we want to explore a bigger question as well, whether trading is even worth it, right, in this video. So that will also be a part of that video, and I see you after the intro. Take care. Peace, guys. Alright, guys, welcome back. So first question we should answer, is trading worth it at all?
Chapter 1. Is trading worth it at all?
My take on this is yes and no. It's a yes and no question. Why is that? Because basically prop companies came about, right? Before prop companies, on this kind of question, it's a clear no.
Don't learn trading for trading on private accounts.
Because chances that you will earn some bigger amount of money in the future are just way too low. Because as you guys know, almost everybody loses in trading, unfortunately. First of all, that, and why is that? That is because of the leverage, as I explained in many other videos. But the other thing is the probability that you build up a small account on a private account. You know, when you start private trading, to build up a small account and then live from that is almost impossible, right? It's just not doable. And this is why if you go the normal route, private trading, you should not even bother with trading, because it's not worth it. Because think about it, you need to spend 5 years to master this craft, right? And at that point, you're still working with a small account. So even if you have mastered the craft after 5 years and you are slowly becoming profitable, then you still have the other issue that you cannot earn enough from your trading strategy. And at that point, of course, you need to go into gambling to flip the account up, right? And there is a small probability that this works out, and it will take, again, a longer time. So because all of those reasons, it's not worth it if you go down the private road. The road is just too difficult. And think about it, guys, you need to factor in also opportunity cost, right?
Problem with private trading.
Hard to master. 3 to 5 years of study and practice. Undercapitalization once profitable. Opportunity costs outweigh the benefits.
The problem is it takes 5 years to master it. In that time you could be a doctor, or you could do something else, right? You could become an engineer and you could get a high stable wage. And with trading, if you go the private road, what happens? Maybe after 5 years you're profitable, but your wage is still very unstable and so low that it's basically not worth it. So you just wasted 5 years and then you don't have the capital. Of course, at that point you could say, all right, but I could save something and then work on a bigger account after 5 years. Yes, you could do that. It might work out in that way. However, you would need to save a lot, right? You would need to save 50k, 100k. Only with these kind of accounts it's worth it at all, right? And even if you work on a 50k and 100k account, your wage is still not going to be that crazy good, and it's still unstable. So for that reason, forget about private trading. In my opinion, if you want to go the private route, it's just a waste of time. Don't even bother with it, right? So is there still a place for private trading in that sense then? And I can tell you guys, yes, there is still a reason for private trading, but you should only go into private trading, build a private account once you establish yourself in prop trading.
Establish yourself in prop trading first.
Once you can take gains from prop trading and move them into your private accounts, right? This is also what I'm doing basically, but when I started there was no prop trading around, so now I'm doing this. But from what I have learned over those 10 years, this is the way to go, right? So once you're good in prop trading, you have these bigger gains, then you can start feeding a private account, and this is where the kind of place is still there for the private account, you know. So private trading is not completely that. However, you would need to kind of feed it with your gains from the prop trading, and only in that sense you should try to use it. In my opinion, like I said, this is my personal opinion, but I have 10 years of experience. In the beginning, when you want to start trading, don't bother with private accounts at all. Don't go down the private road. It's just a waste of time. And like I said, if there would not be prop trading around at this point in time, trading would not be worth it at all. And this question, like, is trading worth it? Should you do it? Would be a clear no for me. Don't go for it, don't learn it. But with the emergence of prop trading with FTMO, they came about 2014, something like that. With that, the question has kind of changed. So for me, now it's a yes and no. And the yes came into place because of the modern prop trading, right? So let's explore this further, guys, and we will see some different scenarios, different possibilities, how you can play it and how you would use it, because the end game, in my opinion, is that you should use both. You should use prop trading and private trading.
Take advantage of prop and private trading to beat the broker.
Because both of them have advantages and disadvantages, of course. But in the beginning, you should try to become a prop trader and not a private trader. Okay, with that being said, guys, we will start a presentation a little bit.
Nice.
So that you can understand this in more detail and have some kind of structure in place, and I will show you this. So let's jump into it.
Chapter 2, Beating the Broker.
Alright guys, welcome back. Now we're in the presentation. As usually, I have prepared something for you. We're here at the first point. As you can see, trading a small account up is basically not doable. It's not feasible. I would not waste my time and money with that. Trading a small account, in my opinion, is a no-go. Don't waste your time with that. And as I said, I have 10 years of experience, so trust me, I know how it is. Don't bother with that. It's just a waste of time and a waste of your lifetime, right? So then the second thing you might want to consider, or you are maybe thinking about, is right here. Save money, right? Save money consistently, or trade and save, something like that, to grow a small account up. What about that? Would that be feasible? In my opinion, again, no, it's not feasible. It's not worth it. Don't waste your time there. You're much better off to keep your money and do passive investing, right? Instead, then you will have a nice account from passive investing, which is safe. If you go into an MSCI World, for example, MSCI World ETF, average in every month, and without the leverage, of course, that is something very serious, and you can, for example, pursue that. So, because the problem is, let's say you do it in a way that you save first. Let's say you save 20k and then suddenly put it into trading, you will lose that account, right? So not only you will lost a lot of time saving that money. Maybe you save for that 2-3 years, and then it will all be gone in trading. It's not worth it, right? The pressure putting your own capital into it, like a big capital, is way too high. Trust me guys, you will lose it 100%. So don't even bother with it. I don't know why, but many people have the idea, oh, I traded with a small account, it didn't work there, but with big money it must work. With big money it's something completely different. I will be serious once it's with big money. Then they save, put a 10k in the account, and it's gone.
And it's gone.
So in my opinion, don't save money and trade. It doesn't work. Of course, you can do also a hybrid model. Think about that. Always save a little bit, put it in the account, then trade a little bit, save, trade. Also that for me, it's too difficult. It's gonna waste too much time. Don't do it. You're better off pursuing a career in those 5 years and do passive investing at the same time. Whatever you have in the end of the month, put it in a world portfolio, MSCI World, ETF, and pursue a career where you become an engineer and then have a nice salary.
Build your wealth through your career in passive investing.
Build your wealth slowly and steady instead of pursuing private trading. On the side, establish yourself in prop trading. When settled, then come back to beat the broker in private trading.
So both of the first points are basically a no-go. I would not recommend them to anybody. And this is why also I said before in the intro that private account trading is basically not feasible to do, and basically trading as such would not be a good thing. It would not be a thing worth going for if there was not be prop trading, right? So now let's look into the last point I mentioned here, flipping accounts. So okay, if the first two things are not feasible, what about just flipping accounts, right? What about just always coming with 1K and try to go all in and flip that? That is, I put kind of okay, because you know, it's actually, in my opinion, this is you can of course totally disagree with that, but in my opinion, flipping accounts is basically the only thing you can do in private accounts, you know. So unless there's one exception, we will talk about that later. But basically, if you compare this, trading a small account up, forget it. Save money and then trade, forget it. The only kind of realistic thing you can do is flipping accounts. Flipping accounts doesn't mean I recommend it, but basically that's the only thing you can do in the private accounts. Then the thing is that when you flip accounts, the chance of achieving a high account is of course better when you start already with a kind of big capital. So I wrote there, chance of success better with a bigger starting capital. That makes sense, of course. If you just start with $200, try to flip, you need so many flips to get a 100K account. It's probably not gonna work. So for example, flipping accounts is better when you can do it with 5K or 10K as a start. Now the question is where you get this kind of money. Should you save and then flip? No, of course not. That would be much too dangerous. But we will talk about some solutions. However, keep in mind at this point that flipping accounts, the chance of success, of course, is better when you can start with 10K. For example, if you start at 10K, you only need like 5 flips or something, and then you are at 100K, right? And then you don't need to start flip, and then you don't need to continue flipping, right? Once the account is big enough, the idea is that you don't flip anymore. So flipping accounts is a possibility, even though I would not recommend it, especially not if you do it with your own capital. We will talk about some other ways how you can flip and how it is kind of okay, but like I said, don't do it with your own capital. So now let's continue in the presentation. Now here, the next kind of points, we will not talk about now about funded trading, the so-called prop trading, right? This is basically the second route you can go. You can go into prop trading versus the private trading, and in my opinion, if you have not a lot of capital, this is completely the route you should go, right? In the beginning. First, of course, you should always practice with demo accounts or free trials from the prop companies. Only once you have a profitable strategy, then you will, pursue that. That is a given, of course. However, now let's see what are the advantages and disadvantages. The disadvantage is that it's hard to pass challenges, right? We know the statistics, only 8% of people that try, or only 8% of challenges, I should say, get into the so-called funded stage. So it is hard to pass, right? That is a big disadvantage. However, there are also some advantages. Now let's look at them. You can of course have bigger payouts once you're in, and that is the reason why you should go there, right? So you can have finally bigger payouts where you can earn 1K, 2K, 3K, maybe all the way to up to 10K, and then have a nice income, right? And with that you can do something else then, right? So bigger payouts once in, that is a big advantage. Then trading as a career is finally possible with these kind of prop companies, with the modern prop companies, as you can see all the logos here, right? And yes, this is the reason why I also said, is trading worth it? And my answer now is yes and no. It used to be only no, but now that we have the modern prop companies, the answer is yes and no, because they brought basically the possibility of trading as a career. It's still very, very hard, but it is possible. That's why I say yes at this point, because we have the prop companies. It is worth it to learn trading as a skill, right? Before that, like I said, it was clearly a no, but with the prop companies, yes, it's worth to learn it. Okay, that still doesn't mean it is the best thing, right? Because you have so many possibilities you can do in life. You can pursue a career, you can go to university, right? You can build your own company in something completely different than trading, right? Still, that doesn't mean it is a good thing or the best thing for you, whatever. It always depends on the situation, but it just means yes, trading can be achieved as a career, and yes, learning the skill of trading is finally, for a normal person, finally something that is worth it. And that's why there is a big hype about prop companies, right? This is not just coincidental. The big hype is here. I've never seen so many people try to trade like in these times, because yes, it finally makes actually sense to learn the skill, and before that it didn't make any sense whatsoever. So now there are still some disadvantages here with the modern prop companies. As you can see, danger, falling into a gambling cycle. That is a big danger right here. In my opinion, it got a lot better because we don't have this kind of 30-day window anymore in which you have to pass step 1 and these kind of things, because this just forced you to gamble, right? But I can still see a lot of people, they want to just gamble there. Once they get in, make big payouts, gamble, and then they lose the account again. They have to redo challenges, so they lose a lot of money passing those challenges. Then they have to create a bigger payout to become net profitable again with companies, and that doesn't make any sense, right? So don't fall into the danger of gambling. I will show you where you can gamble actually, but it's not with the prop companies. It is not clever and smart to do so, in my opinion. So don't fall into the danger of gambling with prop companies, because there is a big kind of I would not say incentive, but there is a big pull towards gambling actually, because first of all, there was the time limit of 30 days. That is, thank God, gone. So we don't need to gamble anymore to get in. But once people are in, they see the big number, the big accounts, and they don't realize a 100k account is actually only a 10k account, and they treat it as a 100k account and start gambling, right? And once they lose the account, this guys is the most dangerous part. When you lose the account, then you actually want to start gambling. You will think, I will need to get the account again immediately, and then you start to take big risk in the challenges. You don't take them seriously anymore, and then you start gambling and playing this game of, oh, I paid so many challenges, I need this big payout, so I can only go big now. And you don't want to be in that cycle, so don't start gambling in the first place, is my insight here, or my tip here. Then yes, the last disadvantages, you can lose the account again because they are risk parameters, right? So this account is not completely your own, so you can not do whatever you like. Of course, there are risk parameters, then you can lose the account. This is of course kind of a disadvantage, but if you think about it, in the private account route, you can also lose your account. Once you get the margin call, it's also done there, right? So in both kind of routes, you can lose the account, right? So now that we have talked about the differences and advantages, disadvantages of private account trading and funded, so-called prop trading, so let's see what we can do as a solution. Also guys, one thing funded here is with the exclamation points. That is important because, as you know, you never work with real accounts there, you work with demo accounts, right? Okay guys, now the question is, what should we do? We want to take the best possible route, and in my opinion here, the best route is to first go into the prop trading. Once you have your profitable strategy, once you're over the demo stage, all of that, the free trial stages, you should pursue prop trading, to get a big account, because only then trading becomes serious, and only then it can be a career, right? But after that, once you're established in prop trading, you have some accounts that you manage there, preferably multiple accounts, like 2 accounts, so you can rotate, right? Once you have that, then it makes sense to also get a private account and then do a symbiosis of both of them, right? Because like I said, private accounts as such for me are not worth to learn trading. Don't learn trading if you want to go in private accounts. But once you're in prop trading, once you have the big capital that you have access through prop trading, then it makes sense to build up your private account. And now let's look into that. Okay, so what to do? Your goal is to becoming a professional trader and then achieve a symbiosis between prop account trading and private account trading. All right, and we will look why that makes sense. I put some graphics here. Okay, so here is basically your prop accounts, right, with some different kind of companies. You want to have multiple accounts. I will also explain why later, but now let's have a look. So then if you get some payouts, basically you want to keep them to yourself. Of course, you should always pay yourself. That is the most important thing. But then also you want to fund, you want to fund your private accounts. So this symbol here represents private accounts. So you want to fund them, guys. Feed your private account with some of the gains achieved in prop trading, And why do we want to do that? The reason is that in prop trading, you have these kind of limitations of the risk, it's never fully your own account. So of course, it makes sense to build up a private account so you are diversified, right? You want to be diversified. You don't want to have everything in prop trading. Also, you don't want to have everything in one prop trading company. You want to diversify there as well. But also you should go back to private accounts and diversify there, because in the private accounts you have advantages, right? You can pay yourself out whenever you like. You can do any kind of trading system that you like. You don't have the risk parameters like the daily loss or something that kind of limit you. However, of course, you should have a strict risk management system in place in your private accounts as well. However, it totally makes sense to seek that freedom that private accounts provide you, and that's why you want to kind of feed your private accounts, right? And now once you have done that, then you need to kind of decide what is worth more to you, because you can go basically in two ways, right? You can increase your private account very, very slowly, or you can start flipping it, right? And in my opinion, the only time when you should be flipping is in this scenario, right? When you kind of feed your private account with your prop trading gains.
Chapter 3, Flipping Private Accounts.
This is the only scenario where flipping makes sense. And now, as you can see in the beginning, I wrote here, what is worth more to you? If you compare again private accounts to prop accounts, what should be worth more? In my opinion, it's a clear answer. The prop trading accounts should be worth more to you. Why? Because they're bigger, they give you access to bigger capital, bigger income, and you can have a career there. And also it was way, way harder to get in there, right? You can open a private account at any time, but to get an FTMO account is not easy to do. So the prop trading accounts should always be worth more to you than the private accounts, in my opinion. And unfortunately also I see this is something many people do also wrong. They think private accounts are worth much more, and they start gambling in the prop accounts and think those are just for gambling. They're not. The prop accounts are worth much more because it's much harder to get in there, and only the prop account gave you access to bigger capital and only could get your career started in the first place, right? So the priority should be to save your prop accounts, under all circumstances, and don't start gambling there. Okay, there is another place where you can gamble, and that is the private account, right? Because here you can see you can then think about flipping your private accounts or increase slowly. That is up to you, depends what you want to do with the private account. You can say, okay, I will do prop trading here, I will copy my signals to a private account and then slowly feed the private account with gains from the prop trading, and my goal is to do that for 5 years and then steadily increase the private account until it's on a very good level, kind of similar to my prop account, right? That you can do, that is the serious way, and will take a lot of time, but of course you can do that. It makes also a lot of sense. The other thing you can do is flipping, okay? Because like I said, if you want to gamble, first of all, I'm against gambling, you should not do it. But if you do it, because I see many traders gamble, then you should do it in the private account, not in the prop accounts, because it's much worse to lose a prop account than a private account, right? So if you want to flip accounts, then you can do it in the private account. And now we want to talk a little bit about, so let's say you are funded and you have like 400k or 600k of prop accounts. You steadily pay yourself out every month, And then you can think about, okay, I want to do some flipping in the private accounts. And that's what we kind of want to look into right now, you know, how to flip accounts. And I will also show you how you can pretty much beat the broker, you know, in the private account. All right, so let's look into that, how to flip the account, right? Personally, I can tell you guys what I have done. That was my biggest flip. I took a $200 account, flipped it into 8.5K. That was pretty insane. It took me 2 months and I was just steady flipping the account. I will show you now also how that worked, but that was from the beginning a private account, which, like I said, I don't recommend to start in the private account flipping in the very beginning. I would feed it with the prop money first. However, I did it like that. I started off with 200, flipped it into 8K. After that, unfortunately lost the account, which was of course with that kind of risk to be expected. But you can see it would have made much more sense to feed that account with you know, with some kind of gain from a prop account. Imagine if this account would have started at 2K instead of $200, right? I made it from $200 into 8.5K, but if that would have started on 2K, right, then it would be much bigger, you know. It would be like 80K, but it would be higher even, you know, because you could even risk more like that, right? So this is how you can get the account and finally into a big account, right? Okay guys, so now very important step here is first you need to beat the broker, okay? So let me tell you what I mean by that. So whatever you put into the broker, you know, it doesn't matter if it comes from the starting money, even if it comes from your prop account, and especially when it comes from your private finances, you need to beat the broker first. This is also something many traders don't realize. Once you trade on a private account, basically, let's say you put $1,000 of your own money into a private account. What does that mean? That means you're basically in a challenge, right? Because that $1,000 are with the broker. They're basically gone, right? If you do what everybody else is doing, right? And what everybody else is doing is they start trading on that account with risk to reward ratios of 3-to-1, 2-to-1, stuff like that, right? And the money will be gone because 90% of people lose everything like in 90 days, everything like 90% in 90 days, but you get the picture. So how you can beat the broker, and this guys is a secret how you can beat any broker. You need to realize that you are in a challenge, okay? The challenge is you paid $1,000 to the broker. This is gone. This is not your money anymore. Once it appears in your trading account, it's not yours. You know, when I put something in a broker, I consider it gone. You know, it's already at the broker. But how can you protect yourself? Basically, let's say you put $1,000, then you need to finance the account off. This is what I mean here. You need to see that the account finances itself off. How you do this? You do small risk to reward trades. Why? Because they are safe. You will have a 90% win rate if you do if you do something like only get 1/10 of your risk. You know, you get with that you get a very high win rate, so you can have safe wins, right? And it's easier to filter that one losing trade out, you know, that comes out of the trend. Remember guys, the last video I have produced about dynamic risk to reward. If you have not seen that, take a look at it right now so you can understand what I'm talking about right now. But basically you want to have safe trades in the beginning to finance the account off, and you do that with small risk to rewards ratios under 1. Okay, so basically when you put 1K in there, first of all you go for small risk to rewards to finance that off, right? And if you have like a risk to reward where you can win with 90% chance, then you only need to filter out that one losing trade, and you have a very high probability to finance the account off, you know, overall, right? Because of this high win rate that is a given because of that risk to reward. All right guys, quick recap here. If you have not watched the last video, go watch it, but I will also summarize it quickly here. So let's go down to a drawing area where we can draw here on TradingView. So basically guys, the reason why you want to work with small risk to rewards in the beginning is because you can safely generate some profits and finance off whatever you put in the trading account, right? And in the perfect world, what you put in the trading account comes from your prop trading gains in the first place anyway, because you know, when you want to flip a private account and beat the broker, and with flipping you can do that in the fastest way, right? Then it's better to start with a bigger amount, as I have explained to you already. So you need less flips. So best if that comes from the, the prop trading, where you can make 1k, 2k, 3k, put this in the private account and then start flipping, right? Because in my example, as you have seen, I started with 200, made it to 8.5k, which is good, but it could have been much better if I would have started with 3 or 4k in the beginning, for example. So then if you work with small risk to rewards, basically what you will get is like a very nice equity curve that goes up like this, right? So basically you have a curve that constantly goes up like this. Sometimes you cut a little trade early because you can see the entry is maybe bad, so it has small drawdowns, but basically it goes up like this all the time, and then eventually it will do like this and crash back to the beginning, right? And if you work with a 1 to 10th or something, or 1 to 5, and with that I mean you gain 1/10 of what you risk, right? Then it will be like that you win 10 times in a row easily. You should even win like 20 times in a row maybe, and then eventually this bad one comes and kind of destroys half of the account or the full account, but this happens somewhere in the future, and the probability that this happens right away in the beginning is not so big because of the high win rate. So you can use this advantage to finance off the account quickly, right? And then once the account is financed off, then you have beat the broker already, because at that point of course you will pay yourself out, right? So for example, let's say you put a 1000 in the account, something like that, and yeah, preferably this comes, like I said, from prop trading, and because then it's much easier to flip than from your private finances. And what you can do at that point, you want to go for maybe 1/10 or 1/5. So let's see what that translates to. So you want to gain basically 100 to 200 USD. Let's pretend this is in dollars, right? So this is your profit that you are going for, right? And then you would need to do this 10 to 5 times, right? If you work with this, right? And that means you have this kind of risk to reward where basically you earn 1/10 or 1/5, right? And somewhere in that area, 10 times until 5 times a successful winning streak, the account is financed off, which you can do rather comfortably, right? Of course, this still means you need to have a good trading system in place where you not will get stopped out after 5 pips already, because then this is useless. Of course, you want to use this fact that you can only need to win 1/10 or 1/5 in your favor, right? So you have a lot of room and take small distances, right? It's akin to scalping. So scalping, in my opinion, is the right way to finance account off in the beginning. Later you can switch the strategy, like I said, to something different, or if you want flipping, or if you want to start flipping the accounts, right? So this is the whole reasoning behind it, because guys, let's compare this kind of system to the other system, and I showed this in my last video. As I mentioned, guys, go watch it if you have not seen it yet. Basically, if you work with a 3-to-1 risk to reward, I'm not saying that this is bad or something, I'm not discriminating against any of low risk reward or high risk reward strategies. I'm just saying they're totally different animals, and one has advantage where the other one has disadvantage, and vice versa. But if you do what everybody else is doing, like right from the beginning, starting to work with low risk rewards, then basically your equity curve will from the beginning be downtrending like this. And if you even increase leverage in this scenario, then your account will be gone fast, right? The reason is, guys, so this is a low risk to reward system, something like that, yeah, where you basically are constantly in a drawdown, right? With this system here, small risk rewards, you're basically constantly in a profit, so the account will constantly grow. But the problem, like I said, the big disadvantage is that one loser will destroy the account, or 50% of it, or gets you back at 0. This is the disadvantage. Whereas here, the disadvantage is that you're right from the bat in a drawdown, which is very hard for psychology as well. And why do most traders lose? Actually, because when you put something in the broker knows with 90% that the broker will win, right? A broker just needs to wait 3 months in the maximum. Most people destroy their account faster, and they will know that your account is gone. So whatever you deposit into broker, let's say you deposit 5k, the broker knows already 90% of 5k will be for the broker, right? So they don't need to pay that back to you, and they never need to pay you any profits, because you're not going to make it anyway. The reason is because you work with a low risk reward system that you can see here, where you are constantly in a drawdown. And then what happens, most traders that are newbie, they are scared of the drawdown. They were thinking, oh, trading should be easy, I practice on a demo, but now suddenly I'm constantly losing because I read everywhere I need to do 3-to-1 risk to rewards to be a good trader. And what happens, you're constantly in a drawdown, then you increase the leverage, and what happens then, when you increase, then the curve goes down even faster like this, right? And then you need to pray that one good trade finally comes and gets you back with one push like this, right? So basically this is the curve or like scenario a lot of people are in, and this is a horrible cycle to be in, right? And this happens when you have a high risk to reward and then even start to increase the leverage because you want to get back to zero. Then it starts falling off the cliff even faster, and then you need to have this lucky punch to get back. You don't want to do that, right? So this is why when you want to beat the broker, you need to realize it's you against the broker. Normally 90% of time the broker will win. Just need to wait a couple of months, your account will be toasted because your psychology cannot handle the high risk to reward systems. So you need to do the opposite. You need to do small gains, small gains, small gains, right? Unfortunately, with a higher lot size as well, because you want to finance off the account fast. If you want to be super safe, you can even take a lower lot size, but still work with low risk to rewards. Then it will take a little bit longer. However, this is the safer system to finance your account off in the beginning. Once you have financed your account off, so once you have earned these 1,000 that you put into the broker, then of course you can change. You can start flipping, or you can just manage your account normally, right? But this is how you would do it in the beginning to beat the broker, right? And like I said, in the best case scenario, this money that you feed into the broker anyway comes from prop trading, because then you're anyway on a on a better level psychologically to beat the broker, right? And have that nice private account in the end. Also, what can be said here, what I should add is that that here we need this 5 to 10 times, right? We need this kind of winning streak here, so to finance it off. But like I said, this is pretty probable that you will achieve this, because you work with this low risk to reward system where you have given already like a 90-80% win rate that is given by the market, right? Because for me, the market is random, and whatever kind of risk to reward you work with, this is what the market will reflect to you. This is my belief. So in this case, you should easily achieve this 5 to 10 winning road, because like I said, this bigger loss will happen here, the one losing trade, but normally that happens in a trend when you get stuck in a trend. So you need to cut trades out that you believe go into the trend. However, this kind of thing can easily happen only after like 20 trades, for example, right? Statistically, yes, this should happen like after maybe 9 trades, but you know, this is just a statistic. Normally it doesn't work like perfectly. You can easily get 20 winning trades and then maybe the losing trade happens, for example, right? Now, if you compare this with this low risk to reward system, what happens here? Let's say you have a $1,000 in the low risk to reward system right here, and let's say you risk 1% here. Automatically you only have a win rate of like 30% because of that high risk to reward ratio. So in this case, you can easily have a losing streak of like 10 trades. That could easily happen, right? So you could lose 10 trades. So each time you will lose $10, and then you have 10 times 10. All right. So that could easily happen on the losing side. So let's make that red with this kind of system. And what does that mean for us in this scenario? Okay, which means you're already 10% down, and this account in this case unfortunately has already gone down to $900. And you can see at this point a lot of traders will start to get sweaty already and try to increase the leverage, in which case this will fall off the cliff even faster. But worse than that is it still looks pretty good because you go down slowly, unless you increase the leverage, of course, because you only risk 1%. But we know most traders in the private accounts anyway want to risk 2%, 3%, 4%, 5%, and then fall off the cliff with the leverage. But how is it when we want to finance the account off? Because nobody thinks about financing the account off. How can you win against the broker? So let's say we start with 1,000 again, and we need to make 1,000 and pay that to ourselves so that we have financed the account off. How does it look here? Because we work with a risk reward 3-to-1, so each time we win we make $30. So let's have a look here. Now let's look at the winning side. So if we win, we make $30. So now the question is, how often do we need to win? And the answer is we need to win 33 times in a row, okay? In a row, guys, or in the net at least after a while. So it's not exactly 33 trades, it's actually a little bit more, 33.333. So let's say 33 or 34, but this is the number of trades that you need to win either in a row or in net to, you know, to get your money back. This is not even to make profit, this is just to get your money back from the broker, right? So you need to have 33/34 trades to be back at the 1,000 right here, so that you can pay yourself the 1,000 back and have still 1,000 in the account, you know. So make 100% on the account and pay yourself so that you are risk free, okay? And as you can imagine, to have 33 profitable trades in a row is impossible with this kind of 3-to-1 system. But of course you can achieve it in net, right? When you see your winners minus your losers, that is possible. I'm not saying the system is bad. You know, I'm not discriminating against any of these systems. I'm just saying that one of them is easier to do in the beginning than the other one, and one of them has advantages whereas the other one, and vice versa. Both of these systems have advantage and disadvantage, as I've showed in my last video. But like I said, here you need to be in the net. In net trades, you need to have 33 or 34 winners eventually, and keep in mind you're working with a win rate around 30% here, which of course you need to be higher. Like, okay, if you can get a 40% win rate with a 3-to-1, that is very good, but it's hard. So the tendency is that you will be in this constant drawdown, very bad for psychology, and it takes forever, you know, to get these 33, 34 trades. That's a lot, guys. Have 34 trades in sum that are profitable, minus all of these minus trades that will automatically come because of this low win rate that comes with the high risk reward. Is very hard, and yeah, most traders cannot endure that. And normally once they start going into drawdown, then they even increase the leverage, which then means it's done. You know, you can never increase the leverage or the lot size with a high risk to reward system, because by nature it is in a drawdown constantly. When you then increase, it will be in a steeper drawdown, then you can just get back with a lucky punch. All right, that's why it's so difficult. I'm not saying it's bad at all, but especially in the beginning, when you need to finance whatever you put into the broker off, here it is hard to do such a system, right? You need to have a very, very good discipline. And yeah, what normally happens, guys, this is exactly the reason 33 trades will take a long time to achieve, you know, in net wins, and you're basically in here for a long haul until you finally are even with the broker. Only at that point you're finally even, and this is what the broker knows, and this is why the broker is so profitable, right? They know people cannot do this, and 90% of people will lose 90% of their account in 90 days. So the broker can sit back, just wait 90 days, and they know you will not achieve these 33 profitable trades, right? They know that. They know you will start messing around with the system. They know that you will start increasing the lot size, and then it's anyway game over. And nobody has the patience to trade around that long, especially not with a small account, right? If this is on a big proper account, this is a different question, right? You can do such a system, but once you work with the broker, when this is only about $1,000, who will do that? Who will do 34 trades that will take months because you need to achieve them in net to be just even with the broker? People will not do this. So this is why everybody loses, and this is exactly the secret, and this is what I want to show you guys. So of course, if you compare this with the first system, this first system is much easier, right? Here you only need to win 5 to 10 times, and then you already even with the broker, right? Of course, what is the disadvantage of the system here on top? This is not the holy grail or something. The disadvantage is that one loser and you will be at 0 again, or 50% down, or whatever it is. So here there's a disadvantage that you basically cannot lose, especially not in the beginning, right? But that should also not happen because the win rate is already so good. The win rate with this system is given, you know, 80%, 90% win rate is given, because I believe the markets are random, you know, and if you have low risk to reward, it automatically means high win rate. If you have high risk to rewards, it automatically means low win rates, right? Because the markets are random, you know. And for the beginning, I'm not saying this is the holy grail forever or something, but for the beginning it is smarter to do this low risk to reward system to become even with the broker, you know, get those 5 winning trades in a row, or those 10 winning trades in a row with the high win rate, then be at 1000 plus. Then don't make the mistake to become greedy, because it's the other thing. Then traders will be like, oh, trading is easy, I win every time, this is the best thing ever, now I want to double again. This is also stupid. At that point, once you have made 1000 plus, so this here is financed off, you need to pay it out immediately to yourself, because you just did what 90% of traders can't do, is you just beat the broker. At this point, the broker cannot win against you anymore, right? If you made that 1000 account into 2000, then pay yourself 1000 out, you're even with the broker. After everything after that, you can only win, right? And in worst case, you are out break even. So this is exactly how you beat the broker, and this is my little insight, one of the little best hacks I have learned over my trading experience is when you go in with the broker, it is you against the broker. Naturally, the broker has a 90% chance of winning against you. That you need to know if you do what everybody else is doing, but you don't want to do what everybody else is doing. You want to do these low risk to reward kind of scalping things in the beginning in a sideways market. Don't do this in a trending market, in a sideways market. Cut it out if you think there is a trend, and then you will become break even with the broker and beat the broker, right? And imagine the hack if this 1000 is not even from your own private finances, because then for psychology is even harder. Imagine this hack when this is from prop trading. Let's say you made 1000 or 2000 from prop trading, put it in there. First, you do low risk to rewards, finance that off, and that doesn't take long. It can be financed off in 3 weeks, something like that. Then pay it to yourself out, and after that you can start flipping or do whatever else you like with the account. Maybe you want to trade seriously there, you can do that of course too. But important, like I said in the beginning, this system for me is preferred just to get even with the broker and then start beating the broker. Okay guys, and this is just what I want to show you in this little graphic. Hope it was clear. If you need more explanation on the low risk to reward versus high risk to reward, because my belief is if you want to succeed in trading, you need actually a dynamic risk to reward, so the best of both worlds, this one and that one. Please go watch my video. I have made an extensive video on YouTube called The Holy Grail, and there you can see it. Now guys, let's jump back into the presentation and get going from there again. Okay, so when I put something in a private broker, I always do it like that. I play very so-called bad risk to rewards, because I want to have steady gains, gain until my initial capital is financed off. Okay, so I will do that until the 1K is financed off, you know, and I achieve that pretty much always, you know, with a 90% win rate. I achieve that 90% of times, right? Only one time I will lose the account, but 90% of times it will work, and this is how I can get my money back, right? So in the beginning, don't do what everybody else is doing. Everybody else is greedy, takes a high lot size and tries to do you know, kind of risk to reward trades of 5 to 1, 3 to 1 and lose the account quickly. I will do the opposite, right? Yes, I need to take a kind of higher lot size so it can finance itself off a little bit faster. Of course, unfortunately, that is still something I need to do. However, because of the high win rate, it can be financed off. Once you have that 1K back, then you can change your strategy, right? So that's what I mean by that. Okay, smaller risk to reward trades until account is financed off. Because as I said, when you put your money into a broker, you're basically in a challenge. It's the same, it's almost kind of the same as you're in a prop trading challenge, right? In a prop trading challenge, you need to make 10%. Guess what? If you're in a prop account, right? So you work on a 100K challenge, you need to get 10k, which is 10%, but you can only lose 10%. So in a prop company, it's the same. If you think about it, you need to make 10k plus, but you can only lose 10k, which means you need to make 100% as well. So if you go to the broker, you need to do 100% first to beat the broker. And the prop company is the same. In the first stage, you need to do what? 100%, right? Because you need to make 10k plus, and you cannot lose 10k at the same time. So it's also a 100% gain, because I treat the 100k account, for example, only as a 10k account, because that's the limit on the downside, right? Okay, so you need to beat the broker first. You do this with small risk to rewards, and this is the key, guys. This is how you beat the broker. This is like a secret cheat code I just gave you. Okay, so then after you have, you know, won against the broker, then you need to decide what you want to do with the account. As I mentioned, you can increase it slowly in the private, or you can do the flipping. Okay, and now let's look into that. You can start flipping, and what's the best way to flip accounts? In my opinion, it is to go for 1-to-1 risk to reward ratios, and then only risk a maximum of up to 50%, right? Because you want to still stay in the game. You don't want to be completely wiped out with one trade. That is normally not good. And so you can do this with 50%. And I think this video I've seen of Q Banks, if you have not watched it, watch my reaction. I think he has been doing that also, because I remember when the account went down there, they wanted to close it, I believe, also once they lost about 50%. Okay, but then it turned around, they made this big gain. Anyway, guys, so maximum 50%, right? Later, once the account is bigger and bigger, you should decrease that, right? At some point only 33%, at some point only 20%, because what does it mean? 50% basically means you're done once you have a losing streak of 2, right? What does it mean to risk 33%? You're done once you have a losing streak of 3, okay? So 50% losing streak of 2, and then 33% losing streak of 3. Once you risk 25% losing streak of 4, once you risk 20% losing streak of 5, you know, until the account is gone. So the bigger the account is, the less you should risk, and eventually you should split. This is another hack. Eventually you should split the account in 2 once it's so big, you know, and then start rotating the accounts. Trade one on one day, trade the other on the other day. Okay, guys, let's keep going here. Build an averaging system. Build that into your kind of flipping account strategy. This is something when I was flipping account, when I had that $200 and flipped it into 8k, I also had an averaging system, meaning I knew I will never get the perfect entry. So I was always splitting my positions in 2 or maximum 3. So once I went in, you know, I looked that I can still have another position a little bit higher and another one a little bit higher. So that means there's a big advantage that you can average the price. You're safer once it goes against you. However, the disadvantage is once it goes for you, you know, straight away, then of course you will not get that much from the flip. But I would also recommend to build in an averaging system. Okay, then let's finally look at some calculations.
Flipping accounts, calculation example.
So it's a little bit more clear how this can work out. So first, what you want to do is build up your private account, okay? And I would do that from, you know, from prop trading earnings. So prop trading, you pay yourself, but take a little bit, take a small split always and put that in a private account. And once you have done that, then the next step is still to finance it off. I would also do that as well as an extra step, right? So for example, we want to start here with a 5k account, okay? $5,000. And let's say I put that money in from prop trading. So from my gains I have from prop trading, every month I took a little split and build up that account to 5k. I would still at that point, but it's up to you, I would still first, as a first step, finance that off. What do I mean by that? I mean by that I would trade the private account first with very bad risk to reward ratios to safely finance off the 5k, then pay myself 5k out, and then start over again. I would do this as an extra step, but of course that's up to you. You can also say, okay, I made that 5k from prop trading, so I don't really care too much if it's lost, so I don't finance the account off first. If that money doesn't come from prop trading, if it's from your private finances, then I would definitely finance it off. That is also my golden rule when I do account flips. If I want to put 1k, 2k, 3k, whatever it is, I work with the bad risk to reward ratios, of like 1 to 10 or 1 to 5, something like that. And so I can only gain a fifth or a tenth of what I can lose, but I have that high win rate. And you will see, you will have 10 profitable trades, that account will be financed off, right? And then you're ready to go. If you're coming from private, if you put that money in the account yourself, I would always finance it off, so you have won against the broker already. And if it comes from prop trading, then you need to decide. You can still finance it off if you like, because after all, that is your gain. It was already yours. So I would still thinking about financing it off first with the bad risk to reward, and then start flipping, but that's up to you. So I still wrote here small RR trades first to finance it off, and then later you can start flipping and risking. So, and yeah, like I said, if you risk 50%, then basically 2 losers in a row means 0, right? Your account will be at 0, so you need to be careful about that. If you want to make it safer, then only risk 25% or 33%, something like that, right? Also, like I said, the bigger the account it gets, the less you should risk. So I made a example here. Ignore please these kind of flags on the side, they just came here with the layout. So let's say I start off with 5k. Let's say I made that with prop trading. So what I can do in the first trade, if I don't really care about that 5k, I can do a 100% risk. Remember, as long as the account is small, you want to have higher risk in flipping. So I will do a 100% risk here, so risk the whole account. Now let's see, after the first flip, we do a 1-to-1 here, right? After the first flip, so we risk 5k, we want to make 5k. The account is at 10k. So after the first completed flip, now we reduce it because now we want to give ourselves more room, so we can have those 2 losers in a row and only then be destroyed. And now we do 50%, okay? So the next flip, again, we're looking to make 5k or lose 5k, and let's say the second flip was good, then the account is at 15k. Now we keep it at 50%. So then after the third flip, it is at 22,500. After the fourth flip, we are somewhere at 33. Then fifth flip, we're already at 50k. And this is a point in time when once it's at 50k, that's pretty good number. I would at that point start paying something myself. First of all that. And the second thing, what you can think about is now split it in 2 accounts, right? To continue the flipping. Because if you split that, you can have 2 25k accounts. So you basically go back to that step right here, right? The 22,500, like kind of we're 25k, and you have 2 accounts. And if one of them gets destroyed, then you still have another one, right? So you have 2 accounts, you can trade them at 2 different days and try to continue the flipping. So that you also need to decide yourself, but after 50k, I would, break it up, because then you just have more possibilities in the end to make it to 100k. So, okay, let's say we continue here and we don't split it. So we again go with this 50% ratio. So then we're at 75k, and then one more flip. After the 7th flip, we're basically at 100k. Okay, so that is very nice. It only took 7 flip with the 50%, but remember in the beginning we did one time a 100% just to get it started more quickly. Okay, so this is an idea how you can flip accounts and how this breaks down mathematically. Keep in mind, this kind of table doesn't take into account this step of averaging right here. Why is that? Because you can see we always do 1-to-1 ratios, and after the trade is completed, it works out exactly like we want. However, I recommend using a averaging system, which means that we try to average in, give ourselves some rooms, but if the market doesn't go against us, if it works directly out with the first kind of trade, then we don't exactly get this kind of high profit, right? Because we were only in the trade with 1/3 of the size, right? But it is an extra step to make it more secure, but that is up to you, how fast you want to be, how your risk tolerance is, right? But like I said, you have many ways to make this account flipping more secure, right? One of them is, like I said, the averaging. Averaging is a very good point. The other is beat the broker first, right? If you go from your own finances, you must beat the broker first, and you do that with a small risk to rewards to finance your initial capital off, right? Even I would recommend, if you put your prop trading money in there, to also finance it off. So that this is another thing to make it more secure. And the last thing is to split, right? Once it's big enough, split it into accounts so you have more possibilities to get to the end goal, right? So these are the ways how you can make it more secure once you would start flipping. But like I said, flipping is not for everyone. It's also not something I really recommend, but here is a breakdown on how you can do it and how I personally would do it, and I have done it sometimes also and had pretty good outcomes with it. And yeah, so these are basically the ideas and calculations behind that, guys. Okay, so as a conclusion, let's jump into that. You need to decide whether flipping account is something for you at all. In my opinion, I would only consider flipping accounts anyway once I'm a prop trader, you know, once I would be a prop trader with a max allocation in some prop company, right? So that means I can have a lot of money coming in, or like bigger money coming in, and then I would maybe take a partial profit of that money, put it in a private account, and then consider flipping, right? In my opinion, only I would consider it then. Of course, you could also think about, okay, I want to do private account trading, want to do flipping there, I can go with my own finances, but that, like I said, is dangerous. Don't recommend it. But if you do it in that way, you need to absolutely beat the broker first. I have showed you how you can beat the broker, and this is the one of the biggest secrets, to use very low risk to reward ratios to finance the account off first, then start the flipping, right? Then also, in conclusion, to wrap up this little presentation, don't gamble in the prop account, guys. Just don't do it. I don't know why I see so many people, you know, starting to gamble in the prop accounts, because they have suddenly 100k and 200k accounts, which are basically only 10k and 20k accounts, but they get crazy because of the numbers, and they think, oh, now I need to have my 10k payout, I need to have my 20k payout. And the thing is, I even totally understand it, because I was the same. Remember, I made one video, guys, I will also put it here in the description, or link it here, where I explained you my story. I got into FTMO, I passed in there with 2 accounts, merged them, you know, it was 2 100k accounts, merged them into a 200k account, and at that point also I was thinking I must make a 10k profit split now, and because of that I lost the account because I had way too high lot sizes, right? So I can understand why it happens, but like I said, the prop accounts should be looked as much more precious, you know, they should have been seen as much more precious than the private accounts. So don't start gambling in the prop accounts. It doesn't make any sense to gamble there, because it's so hard to get in, and only the prop accounts give you the access to bigger capital with which you can then do other things, right? So they need to be absolutely secure. And how to keep prop accounts secure, I will make a separate video about that, because there are also different kind of things you can do, like build a profit buffer there, you know, rotate different accounts there, stuff like that. I will make a separate video and go in depth there. But like I said, they should be more valuable, and if you want to gamble or something, then like I said, only in the private accounts. There you can think about flipping, right? If you want to have this thing in your head, oh, I want to have big money, I need to have a big payout, then think about, okay, I need to flip up a small account first, right? And that small account needs to be initiated with prop company money I made there, right? I would do it that way. It is much safer than to gamble in the prop account, because, you know, imagine, guys, you have a 200k account, you start gambling there because of the big payout, you go and draw down then it is done, right? Then you worked maybe 6 months to get in there, the account is gone, you could not do any profit splits because you started to gamble with a big size and you don't have any big payouts, and all the time, money and effort and what your personal money you put in there is gone, right? So don't ever do that, guys. And then it's much safer to, you know, be in the prop account. So let's say you have a 200k account, right? Let's make a one last example here, calculation example. Let's say you work on a 200k account. Then you can say, okay, my target is to make a modest 2 to 3% in 1 month, right? And it should even be smaller because, like I said, the 200k account is not really a 200k account. So let's say you just want to make, let's say 2%, right? That is still 4k gain in 1 month from the 200k account, and that you can definitely do. I've done that also a couple of times as well with the prop companies once I was in FT mode. So you can definitely make a moderate 2% gain there, which is 4k on a 200k account, right? Then you can take the 4k, then you can say, okay, from the 4k, of course there's still a split with the company, but I would just make it a little bit easier to calculate it. Let's say you got out 4k net, right? Then you can say, okay, 1.5k of that I put in a small private account. Then you can do this maybe for 2 months, then suddenly your private account is at 3k, and then you can do this kind of system where you start flipping the account, for example. Okay, so with that being said, guys, let's see what I wrote down here. Don't gamble in the prop accounts. If you like to gamble only in the private accounts, yes, but gambling anyway is bad. But if you need that in the private account, and because trading without a prop company account is not worth it. Yes, this is again comes back to the very first thing I said, and this is also how I want to wrap it up. Trading is not worth it without, you know, a prop company, in my opinion, right? This private account trading in the very beginning, once you have nothing, it's not worth it, and that's why don't gamble in the prop accounts, because once all of that is gone, you're basically back at zero, right? And once you're back at zero, it doesn't make any then trading in private accounts again doesn't make any sense. All right, guys, with that being said, we want to wrap it up here. Wish you a good one, and I catch you in the next video. Take care, guys. Bye bye. Peace.